While interest and usury are not allowed under Islamic financial system, Islamic finance use a new financial stream as a business model, such as commercial enterprise. Islamic financial system categorized the business models as asset-based financing, actual profit and loss sharing, capital market operations, equity and sukuk, and fee-based services. Asset-based financing includes either sale purchase of assets to earn profit or provision of assets for rental income. Practically most of the sales of assets are completed on a deferred basis as opposed to spot exchange of counter values. Islamic finance offers various products and services. Some of modern modes of Islamic finance include mudarabah, profit sharing and loss bearing, sukuk bonds, musharaka joint venture, murbaha cost plus, and ijara leasing financial models. In the following slot, we discuss the top 5 products and services of Islamic financial system. 1. Murbaha financing, and asset-based financing that a cost-plus contract where one party purchases a good or service on behalf of another party and sells it to them at a markup. The seller discloses the cost and the profit margin to the buyer, and the payment is usually deferred or installment-based. 2. Ijara financing and asset-based financing where a leasing contract where one party leases an asset or a service to another party for a fixed period and a fixed rent. The ownership of the asset remains with the lessor, and the lessee is responsible for its maintenance and insurance. Ownership risks of the asset are borne by EFI, while expenses relating to using the asset are the responsibility of the client. The difference between ijara and sale is that ownership in ijara remains with lessor, while in the case of selling it is transferred to the purchaser. 3. Mudarabah financing, a partnership contract where one party provides the capital and the other party provides the labor or expertise. The profits are shared according to a pre-agreed ratio, and the losses are borne by the capital provider. Mudarabah partnership in capital and skill is a type of partnership whereby skill and money brought together to conduct the business. Profit is shared according to an agreement, while the loss is borne by capital provider only. Islamic financial institutions, EFI, provide financially capital for skillful people to do the business and share the outcome, like investing on small business, startups as venture capital. 4. Musharaka partnership in the capital, a joint venture contract where 2 or more parties contribute capital, labor and/or expertise to a project. The profits and losses are shared according to the proportion of each party's contribution. Musharaka means a joint enterprise formed conducting some business in which all partners share the profit according to the pre-agreed ratio. Under Sharia-based modes of financing, returns of a financier are not fixed in advance, rather, it depends upon the outcome of the project. However, the loss is to be shared according to the capital contribution, as per Islamic law. 5. Sukuk bonds, Islamic bonds that represent the ownership of an underlying asset or a project. The sukuk holders receive a share of the income generated by the asset or the project instead of a fixed interest payment. Sukuk bonds are a creative innovation by the Islamic financial system, categorized under capital market operations, that are designed to replace the conventional interest-based bonds. Sukuk bonds are the avenue for low-risky investors intending to earn a regular stream of earning. As per design, sukuk are ownership certificate in real assets like building, road, bridge, etc., and/or a portfolio of assets with dominant contribution from real assets such as a business. There are multiple types of sukuk, including ijara, investment, murabaha, salam, musharaka, etc., with specific designs. Focusing on the sukuk type, which provides relatively fixed earnings, ijara sukuk, very close to conventional bonds in return, the model suggests the sale of an asset to sukuk holders for a price. The total value of the underlying asset is divided into multiple ownership certificates offered for sale to investors. Follow for more.